you. It's a pleasure to have you for company on this week's edition of the program. We remain a one-stop shop for all the latest happenings in the insurance world. My name is Lucy Olube. You are welcome. On our lineup this week, we take a breather from our regular to bring you a special report on the distribution channels of insurance products and services in the Nigerian market. In the last few decades, continued environmental, operational, and technological changes have led to the development of multiple distribution channels in the insurance industry globally. Insurers no longer rely solely on traditional channels such as agents and brokers, but have developed new alternate channels to drive growth at lower costs. But is this true of the Nigerian market? The answer is no. Data from the Nigerian Insurance Association (NIA) shows that the Nigerian insurance market is still heavily dependent on traditional distribution channels for survival. Will the tide ever change? Why is the adoption of technology for insurance distribution still abysmally low in Nigeria? These and many more are what this special report seeks answers for. But first, let's hear some excerpts from experts in the insurance market in Nigeria as it relates to product distribution.
For corporate governance issues, most clients would prefer to deal with a broker rather than deal directly with an insurer.
Most of these direct marketers, some of them are not in direct employment. Some of them are casual workers. By the time you place their business, before the point of renewal or at the point of claim, you discover that some of those marketers would have left the organization and you begin to run helter-skelter. So they prefer to go to brokers who are more professionals, who have offices, and who have what we call professional indemnity. So that if for any reason you take any professional advice from them and it goes contrary to what you have presumed, you can sue them.
Over 79% of the insurance industry are actually playing digital game. So everybody is talking about we are getting digitalized, we are trying to create e-business channels. So, but when you look at it, 79% of the insurance companies, they are only playing digital games. And some of them are just at the tip of learning how even to use digital capabilities.
What more can I say than to urge you to sit back, relax, and enjoy the lineup. Details in just a moment. Please stay with us.
What takes your anxiety away?
Access to medical care without financial constraint.
Assurance of a cover for my car and I.
Keeping my family protected despite my low income.
Knowing that my goods are secured while in transit.
Not having to worry about the pain and the bills at the same time.
Having my investment secured.
No matter what safety means to you, we provide you with a covering to keep you and all that matters to you safe.
Consolidated Hallmark Insurance PLC. Anxiety away. Value assured.
The Nigerian insurance industry has been active since the early 1900s. However, insurance penetration remains low at 0.4% against 2% in Ghana and 17% in South Africa, according to available data. With a population of over 180 million people and insurance penetration at less than 1%, there is a huge potential for growth. This potential for growth has made the industry attractive to foreign entrants as well as local players looking to expand their reach. One area that has hindered the reach of insurance in Nigeria is the channels of distribution of insurance products and services. Distribution channels in the insurance industry are rapidly changing with the use of technology. While this sounds good, available data from the Nigerian Insurers Association (NIA) shows that traditional distribution channels still remains the backbone of the industry. According to the data from the NIA Digest, insurance brokers account for 54% of the cumulative distribution, followed closely by insurance agents with 26%, direct sales and bank assurance account for 7% respectively, with e-channel surprisingly at 0%. So why are insurance brokers still the #1 choice when it comes to insurance purchase in Nigeria?
Okay, the reason the Nigerian insurance market is being dominated by insurance brokers are quite clear. First of all, you have less than 50 registered insurance companies in Nigeria, and you have over 500 registered insurance brokers. So you can imagine when you have 50 people going after clients with a number of employees and over 500 insurance brokers, definitely that could be one of the reasons. Another one is that for corporate governance issues, most clients would prefer to deal with a broker rather than deal directly with an insurer. Reason being that the broker, being a professional in that field, will guide the client as to even understand the dynamics of your operations and advise you on the kinds of insurance you need. You know, they will also go further to even advise you on the underwriter that is best fitted to take up that risk for you. You can imagine when you now walk up by yourself to an insurance company to do your insurance, then who will advise you whether that company is actually fit to cover that risk or not? That is one aspect. Then another is that brokers, normally in the course of our business, we don't just focus on profit making. We focus on advisory services to our clients.
Mr. Zubike's explanation seems to align with our sampled consumer survey in terms of buying insurance experience itself, and found that consumers overall have a positive perception of purchasing insurance through insurance brokers or agents, but are neutral to most other sales channels such as online and bank assurance.
I normally buy my comprehensive insurance from my insurance broker, and the reason is because I believe that brokers can get you a better deal, and then they fight on my end. I remember one time I bought my car. It was a Hyundai, it was CR-V, and it caught fire at one point, because it was a December period some years ago, and some children throwing knockouts and all that. Eventually, Shadity entered the engine, to cut long story short, the car burnt down totally. The engine burnt, and then in trying to fix it, the insurance company said it's going to cost like about 700 and something K, and they can't pay that too. So what they did, they repossessed the car, and then they paid me the money I used to buy Of course, they removed inflation, about 100K from me, but it was more than what's buying a comprehensive insurance. And the reason I was able to convince them, get them to see what happened, why the car got burnt and all that, I had a broker who took the case to them and let them understand this is what happened, this is why it wasn't negligence or anything. If I didn't have a broker, probably they'll be telling me stories. Actually, in your policy, is negligence and this and that. They'll be quoting one or two. But I had a broker who protected my interests, who knew that yes. And then there have been one or two other incidents I've had with cars. Accidents, crash here and there, and insurance company always pay up because I buy with the brokers.
So insurance basically is you getting cover for any valuable property. So it could be a vehicle, it could be your house, it could be your household item, it could be anything. So insurance means that in case there's a loss, a certain loss, you get the same exact value, by the insurance company, so you don't lose everything in its entirety. So basically, that's what insurance is all about. You'd get in touch with an insurance broker. That's how I did it when I wanted to buy insurance. And and you let the insurance broker know, what's it called right now, what kind of insurance you want to buy.
Although we reached out to Arian to have their views on why they still maintain a strong position in the distribution of insurance products in the Nigerian market, they declined to speak to us on camera. Although insurance brokers and agents are typically the key players in the insurance distribution channel with a market share of 54% and 26% respectively, insurance companies have been making huge investments in the recruitment, training, and maintenance of their marketers to engage in direct sales to their customers without shelling out commission for any middleman. While this looks good on paper, reality check by way of data shows that direct sales account for just 7% in the Nigerian market. Why is this so?
In the first place, I would say that the data is quite revealing, and it means that we need to do more in that aspect. I would say so because the insurance public is becoming more aware, and they want to have more value for their money. Because of that, they opt out for professionals, because most times the direct marketers, they don't seem to get, what they require or what they need, essentially when it comes to professional advice. Also, most of these direct marketers, some of them are not in direct employment. Some of them are casual workers. By the time you place their business, before the point of renewal or at the point of claim, you discover that some of those marketers would have left the organization, and you begin to run helter-skelter. So they prefer to go to brokers who are more professionals, who have offices, and who have what we call professional indemnity. So that if for any reason you take any professional advice from them and it goes contrary to what you have presumed, you can sue them. And these people have knowledge of all classes of insurance. They can advise you on the best, class of insurance to take. Also, don't forget that they have this one-on-one touch with their clients. Most brokers dedicate some staff to particular companies. You resume there and close there, just to make sure that all loose ends are tied.
Apart from direct marketing of consumers, insurers globally are also investing heavily on technology or e-channels of distribution. With advancements in technology, especially with Nigeria's reported 104.4 million internet users as at January 2021, that is 50% internet penetration, one would think that the insurance market is sitting on a gold mine. But data shows otherwise. As customers continue to integrate the use of the internet in their daily lives in Nigeria, the insurance industry is yet to integrate technology with the whole policy sales cycle, as e-channels remains abysmally low at 0%.
Over 79% of the insurance industry are actually playing digital game. So everybody is talking about we are getting digitalized, we are trying to create e-business channels. So, but when you look at it, 79% of the insurance companies, they are only playing digital games. And some of them are just at the tip of learning how even to use digital capabilities. That's one of the reasons. Then again, the statistics stated that about 57%, the current operational model do not facilitate digital. So, and that's very critical. What I mean now is, assuming you even have that digital outlets, your operational model must support it. It's not only enough to say, okay, I have a website or I have a mobile solution, I have a USSD which has to be will be stored in a particular repository before having a handshake with your core, or the processes behind are not actually digitalized. So it creates a gap. So, and almost 57% of the insurance industry are in that particular position. So if you want to go digital and you want to encourage penetration, deeper penetration, particularly using the digital model, then your operational model should support it back to back. Not that you have it halfway, then at the back end is not there. Your processes inside are equally not digitalized. There's a gap. It's going to actually slow down the adoption and even the measurements too. Then I think the statistics is equally very obvious. It stated that 47% of the insurance companies do not have a use case, even for digitalization. There's no clear digital strategy. So, and these are the factors that will actually enhance the adoption of digitalization of our product. So it's critical.
Social media platforms such as Facebook, LinkedIn, Instagram, and Twitter have witnessed rapid growth over the last few years. Many of these platforms have matured and feature embedded functionality that better help businesses to reach out and interact with their larger audience or customer base. With the rise in the penetration of smartphones with enhanced social media applications and Nigeria's impressive 187.9 million mobile connections as of January 2021, social media is acknowledged as a growing phenomenon for the insurance industry.
This new age of our digital sphere, it's very easy to get insurance. Most insurance companies have made it very easy that you can just go online and then procure your insurance policies. Back in the days, you have to just go to one insurance company or meet a broker to get an insurance, but now it's made very simple and very easy. So you can go online, go to any of the insurance companies online, and then pick up a policy, and then you're good to go.
Customers now use social media platforms to obtain sales-related advice from their friends, families, or other contacts, and gain feedback on various products and services except that of insurance in Nigeria. This is so because most insurance companies in Nigeria have not been able to create a seamless online real-time sales experience with their platforms.
In most cases, in that scenario, you may likely have to say, there's a possibility that you may batch it and post the transaction as a batch transaction for that group, okay, that affinity group you are dealing with. So which is a stage in evolution of digitalization, which everybody must pass through. But from the moment you begin to get matured digitally, you realize that you move from that stage to another stage, whereby, okay, when you do that transaction, either from your mobile app or from your website or from your USSD, there is no need for it to be warehoused anywhere. It enters straight to the application. So it is only when that has been achieved that we can measure the true contribution of the digital channel to the system. Yes, it's low, but I think 0.3 is ridiculously low.
While brokers and agents still and will remain dominant in insurance distribution, there is no doubt that social networking sites will continue to gain ground in the insurance industry. So how prepared or to what extent are they willing to go by way of not just investment but also training?
You know, there are some areas that the direct marketers have issues when it comes to claims, especially claims that fall on borderline. That is where the brokers have an edge. You know, the broker can use his influence to get cheaper rates because they are trained in what we call, negotiation, power of negotiation. They price better, So in that area, I think the direct marketers cannot beat them, definitely. So we need to encourage our direct marketers by making sure that if any of their clients or customers have issues, especially relating to claims, we'll give them the same preference we'll give to brokers.
All over the world, digitalization brings a new normal in the ways of doing business, and the insurance industry is not excluded. But what we see is the Nigerian insurance industry that has not fully embraced digitalization. Before you can say that digitalization can go a long way in driving business, then one has to talk about the extent of digitalization. What we see today is a situation where most companies, particularly the underwriters, have a upped their digitalization only to the extent that they can do business with some set of clients.
For adoption of technology in the distribution of insurance products to be meaningful in the Nigerian market, issues of regulation must be sorted. Today, the National Insurance Commission (NICOM) is embarking on digitization of its processes to align with the 21st century insurance operations. The focus of the regulator should move from looking for new distributive channels to properly harnessing what already exists and make it better.
The traditional method of distributing insurance is becoming outdated. When I mean outdated, inadequate to take care of the speed we want to gain and the people we want to reach. So we must begin to develop other channels. There are a few of them that have been developed that are waiting for final touches here and there for them to be released. Those ones we are actually looking at.
Social media is here to stay, and Nigerians' internet penetration can only continue to grow as more and more people acquire smartphones. Insurance companies, regulators, brokers, and agents must broaden their internet-based strategy. For those with tied agents, the insurers must help their agents understand fully the implications of the trend on their role as advisors and how to best leverage it. Insurance brokers, despite their control of the market at the moment, must also integrate technology in their operations, especially social media. Brokers can use social media channels to assess the needs of the customers and standard of service being offered. While technology is the currency of the future for all stakeholders in the Nigerian insurance market, especially social media platforms, there is also need for caution, as those platforms will also expose its industry to greater transparency and scrutiny. Even relatively small mistakes regarding information presented can be picked up and blown out of proportion, which can bring embarrassment not just to the firm, agents, or brokers involved, but the entire market. To avoid such pitfalls, all stakeholders in the insurance distribution value chain tilting towards social media platforms must consider a long-term implications of increased transparency on those platforms. The social media corporate policy must outline the level of disclosures that would be made available online and how customers' feedback and queries would be handled.
Alright, that's our time on the program this week. Many thanks for being a part of it. Join us again, same time, same station next week for a fresh package. In the meantime, feel free as always to connect with us on all our social media platforms. There is a lot to see on our YouTube channel, Almond Finance TV. Just subscribe and join the fun. Waiting Insurance They Do Save, our flagship Pidgin English program, is live every Wednesday on Nigerian FM 102.7 by 9:45 a.m. My name is Lucy Lube. Until next time, do take care and be your brother's keeper. Bye-bye.